Hello everyone, welcome to another chat breakdown here. I'm doing this video live with you guys so you guys can be trading on real time following the same analysis. Today is Thursday and uh, I'm gonna be doing the analysis based on what I am actually seeing today on Thursday. Okay, look, I'm going to start my analysis on the weekly time frame. Okay guys, stick to the end. Looking at the weekly time frame, I can clearly see that EU was in the range left hand side. Coming to the right hand side, EU took the low of the range, and based on range trading, when price takes one end of the range, we expect price to come to the opposite end of the range. And then looking at my key levels, I can clearly see that EU is currently at key level on the weekly time frame, other block key level, right? Okay, looking at also, I can clearly see this FVG resting above EU, right? And then I got an SMT with GU. This FVG got an SMT with GU. Price tap into this FVG on the GBP USD chart, and on the Euro USD chart, price didn't tap on this FVG. Currently at that's what price is selling based on SMT. Regardless, let's continue. What I will do next is to refine my weekly order block on the daily time frame, and then also refine my structure in order to keep on my analysis going. Okay, looking at the weekly time frame, I can clearly see price was in a downtrend on the left hand side. Lower lows, lower highs, lower lows, lower highs, lower lows. Price broke above the swing high that precede the breakout below the swing low here. So then price had not changed trend, and price is now in a bearish trend, in a bullish trend. That is what I call a market structure shift. Market structure shift or change of character. Refining my key levels here. Um, got this bullish order block refined inside a weekly order block. I got this MVG above my order block. I also got this MVG above my order block. Another thing is I also got a downtrend here. So let me first explain what's happening. Now I've refined my key level right on the weekly time frame. What I want you guys to understand here, we got the daily range. That is, the market took the low, right, and the high of this range, and then create an expansion swing. Then we got a daily range, and when we have a daily range, we divide our chart into two sections. That is the premium and discount region, and we focus on long-term trades when price tap into the discount region, right? Now we got price at discount, and our job is to actually look for buy setup when price tap into our discount, right? Also got this internal bearish structure inside our bullish structure, right? Got an FVG resting above it. Okay, right now price is actually in a range profile, because looking at this internal bearish structure, right? Let me use tools. Looking at this internal bearish structure, we got a break of structure here, and then whenever we have a break of structure, that is also, which is also called an expansion profile, what we should expect is a retracement profile to the or we expect a range profile. These are the two possible expectations whenever we got a expansion, maybe higher or lower. This is what we should expect. This is the daily time frame. And another thing is, we got this fair value gap here. Price is tapping into this fair value gap, and and around that fair value gap, that is actually where price is actually ranging. So you guys shouldn't be confused. This is what we are got in here, and what I want you guys to understand is price is in a range profile. So we can just be looking our CRTs, right? Just circling us, looking our CRTs and trading them. Okay, this could this was a this was an SMT, right, with this FVG, because price actually respected the FVG on GU on the 1 week time frame. So we got an SMT. That's why price is selling, pushing lower. Regardless, we should be careful. We should combine our CRTs with our key levels before trading them. And currently, price actually is bearish right now. Price is bullish based on the dealing range, right? Because we are actually trading below 50%, and also due to the internal structure, which is actually what we are actually looking at right now. We could actually look for sales, right? As soon as price actually close within this range here, right? You could look for sales, and that is why the market is actually selling. Okay, looking at the market right now, I expect the market probably to continue selling right up to this other block here. If the market can reach this other block, I can still look for my reversal signals to continue to buy from here. What I want you guys to learn from this video is that the market analysis should be mechanical, in such a way that you should actually have your short-term drawn liquidity and your long-term drawn liquidity. My long-term drawn liquidity is this weekly range high, this weekly range high, this weekly range high. My short-term drawn liquidity is when I apply my if then principle. We close above, we expect higher prices. We close below, we expect lower prices. We weak above, we expect lower prices. We weak below, we expect higher prices. That is my key to bias, and that is short-term bias I'm talking about. And don't marry the trend. Do not marry the market. When you take a trade, don't expect to hold the trade forever. Have a place where you expect to close your trades. And if you do your analysis every single day using this particular logical framework, you are going to be having a high chance of always cashing good trades. You get? That is just it, guys. We got a break of structure here, and looking at what the price is actually doing, right? This break of structure, or you can call it BOS, it's our internal bearish structure. So you should be aware of that. Should be aware of that. Aware of that break of structure. So you should be aware of all of these things. Then position yourself logically. Avoid trading based on fear and emotions. Trade based on logic, because that is how the market operates. So just be vigilant, just be careful. Avoid any single thing that will make you fail on your analysis, right? Okay, guys, this end of the video. If you enjoyed the video, you like, comment, and subscribe. The reason why I didn't actually explain so much because there was no clean CRT for us to take to go to the 4 hour time frame on a key level. That's just what I was preaching. Yeah. Okay. Enjoy, guys.